Good afternoon from Riga. Today's Friday, the end of the week. So what do we have? Let's take a look at the use of RSI indicators. I'm just telling what I will be talking today is going to be just the basic of RSI indicator. And what is RSI indicator? The relative strength index, and that is a momentum indicators. It's kind of I actually don't use that indicator, but I just want to put this video out there on our YouTube channel. It's not because the indicator is not reliable, or analysts or trader they have the indicators that works for them. I am the one that I'm not a fan of using a lot of indicators. I like to keep it simple. However, the RSI indicator is a very simple indicator. It's kind of very simple indicators. So for some people, they might like it. For some, they might not like it. So for me, I don't like using it. That does not mean that it doesn't work or so. Theoretically, it works fine. But practically, you have to incorporate some other indicators in order for you to make sure that it's working fine for you. That being said, if you have any question, drop it on the chat box. I will be answering your question in a due time. And for those guys that was trading, I made a mistake actually. Yesterday I supposed to do the preview or the review of the update of the UK general election. I was advising some of my friends and some people that was close to me that, hey, stay clear from the British pound currency pair. That there's going to be a lot of volatility in the market. And that was what happened yesterday. During the day, there was a volatility downside. The pound was declining. And in the midnight, that was by 12 a.m. Riga time, when the exit pool came out, boom! The British pound bounced against the US dollar, 420 basis points. So that's kind of a very big jump for the British pound. So I made that mistake yesterday. I would have dropped the video and advise new trader to stay clear from the market. But actually, some people win, some people lose. That is how it is. Some people were going long. Maybe they already take a review of what will happen. So some of them were going long, some of them were going short. But for a very good advice next time, it's always good to stay clear from a currency pair when that country is having an election and the election is proving to be uncertain, or the election is having a great impact in that country's political landscape. So it's always good to stay clear from that. So that being said, let's go back to our topic, the relative strength index. And one of the reasons, apart from I want to just show you guys the basic of the relative strength index, the reason why I'm doing this webinar today, we already have an article. If you at the end of the day you don't want to just win general elections, if at the end of the day you didn't have time to listen to this video, or you didn't know where the article is, you go to Lucas Copy website, you go to market news and research, then you click on the article. We already have it there, and to come up on your screen in a moment. This is the use of RSI indicators. So if I will give you the short definition of what is RSI indicator. As I told you, that's kind of a momentum indicators, and the RSI measures the strength of price in the market. That is the definition, the short definition of relative strength index. They measure the magnitude of price movement as well as the speed of this movement. You don't need to cram it. You just have to know that relative strength index measure the momentum of price in the market, or they measure the strength of the price in the market. That's a simple definition of relative strength index. And there is formula for relative strength index. all indicators have their formula, and how does it come about. Just like the Fibonacci retracement, just like the MACD indicators, all indicators has their formula, and the formula for the RSI, you can see it right now on your screen, is 100 minus 100 divided by 1 plus RSI. I will just open the chart for you, and I'll give you this. I'll write it, then I will explain for you what does that mean. Let me go here. I'll take this pen. So the RSI. So the formula for RSI is what's it called? RSI equals to 100 minus 100 over 1 minus ROS. I don't know if you are seeing it very good, but yeah, I believe you're seeing it. That's the kind of formula for RSI. And you might be asking, what is this ROS? The ROS is kind of simple. It's the average number of days up, and divide by the number of days down. This is how it works. So maybe I will let me take my pen again. It's gonna be, if you want to know what is what's it called, ROS is equals to the average x of this up, you divide it with the average as this down. So that's that ROS, that's what it stands for. So this kind of a basic, you don't have to know this on your head. You don't have to cram this stuff, because nobody is going to ask you in the exam. You are not going for an exam. You just have to just know it normally, just in general, or you just have to know how the indicator works. That is what I'm here for, to show you how the indicator work. So the RS is kind of, it measures a certain number of days. I will bring back the articles. I believe that you already see what I wrote here, so I will return back to what's it called, I'll return back to the chart, and I will explain for you in practical terms. But before I will explain for you in practical terms, I'll bring back the the articles. You can find it on our website, and you can see that's the calculation. The ROS is calculated by dividing the average gain over a certain period, which I just explained, over a certain period, and by the average loss at that same period. So it depends on she put the traditional number of days there is kind of 14 days. That is the settings of the RSI. I will bring it here. That is the setting. That's the traditional setting of the relative strength index. So you can easily have it whatever days you want. It depends on what you are looking at. You can easily put 10. It does not matter. So you have your settings and what you want. So I put it to the traditional period of 14 days. So that's the formula for the RSI. And if you might be asking yourself, okay, I already know the definition of RSI as the momentum indicators that measure the strength of the market. I already know the calculation of calculating the average number of days, the profits divided by that average same number of days, the loss. I already know that's okay. How does that comes to like the importance. What is the importance? How can you use that? That's the next question you might be asking. It's kind of very simple how to use the RSI indicator. But before I will measure how to use the RSI indicator, it's just before I will show you the chart actually. RSI indicator shows you when the market is already in the overbought zone and when the market or when the price is already in the oversold zone. You can use it in currency, you can use it in stocks, name it. It's working relatively good. So you use it to figure out where the market is. Is the market oversold? Because if the market is oversold, you don't want to continue selling, because you have a big chance of losing, or what's it called? Yeah, having a big chance of being on a negative in terms of profit. If the market is overbought, you don't want to continue buying because there's a potential reversal down. That is when the market is already in the overbought zone, then the RSI is already indicating for you that the trend might be changing either short term or long term. So I already explained that for you. Let me show you the charts. It's very important for me to show you the chart. This is the practical one, and I will tell you the skills on how to use it. But before I will show you the skills on how to use it, I'll open it for you like this. This is the RSI which you're looking at right now. That's the RSI. And there are two values for RSI. The 70 what's it called, from 0 to 10. From 0 to 100. That's how to evaluate the RSI. From the 30 below indicates that the price is already in the oversold zone, and from 70 above it indicates that the price is already at the overbought zone. This is what you're looking at right now. I will shift my, just a second, I will shift, put it there so that you'll be seeing it. So at this point you can see this is the 70 and this is the 30. When the price is close to this zone or below that zone, it is in the oversold zone. You don't want to continue selling the currency pair or the stock, because it's already indicating that there might be a potential reversal. When it's the 70 above, it's showing you that the price is already in the overbought zone. You don't want to continue buying when the price is already showing you a potential reversal. So this is how it is. The overbought zone and the oversold zone. So that being said, how can you use it to predict the market? It's very simple. You can use, to me, you need to look for a market that is trending, either to the upside or to the downside. Look for a trending market. It will work fine for you. Or if you don't want to look for a trending market, as you can see right now, the Euro USD, this is the 4-hour time frame. This is a ranging market. And what you want to look, you already spot that the price is ranging between 1.145 and 1.110. So what are you looking at right now? If you want to have a positive trade or profitable trade, this currency pair, the Euro USD, has been trading within range of 1.145 and 1.1110 since November, since the middle of November. So in other words, you can easily, when the price is kind of at the 70%, at this zone which you're looking at right now, this place, you can see that it's already indicating the price is in the overbought zone, and this currency pair, the Euro USD, has been ranging since November, and that is kind of that is since November 2018. So beginning of January, you see that the price is already above the 70 or close or above that 70%. What you want to do, you are looking for opportunity to short the market. And if right now, look at it, I'll open it, I'll take my, so watch this. It's at the 70%. This is the same. So the price is already showing you at the 70%, the overbought zone. You don't want to continue buying. The price has been ranging between this zone. So what you want to do, you want to sell this pair, not to buy. And if you short at this high, you will be in a very good profit. Yeah. The same way, when it comes to this zone again, look at it. Showing you that it's in the overbought zone. You don't want to continue buying. You're looking for opportunity to sell. This is a ranging market. This is a ranging market. When it tests the lower boundary at 1.110, you are looking for opportunity to buy. It's showing you that what is in the oversold zone. You want to buy this currency pair. This is in the ranging market, like if it's trading sideways or it's going between one range up and down. So I will show you when the market is trending, what will you do. Okay, let me take this for example right now. Let me just show you that. Okay, I can tell you that the gold USD has been edging up since July 2018. This is the daily time frame. What will you be looking at? You're looking to buy this market, not to sell. Actually, I will tell you directly, you are looking to buy this market, because even when you say this price is above the 70, I want to short, there might be a divergence. You don't know. So in other words, in order for you to play safe in a trending market, you look for either buy or sell. In this gold USD, you're looking, take a look at this point. The price is at 1200, and they're showing you the trader is already looking at the strength of the market is already oversold. So you don't need to start looking for buying opportunity, selling opportunity. You need to look for a buy opportunity, because it's already indicating there's a potential reversal. And finally, which pair will I take a look at? Just a second. Yeah, I talked about that trending market. Okay. Finally, let's take a look at the Euro JPY. The Euro JPY is still on the trending market too since July. From this high level, the price is at that 70% or above. You are looking to short the market. The same thing. It's at this 70% level. You're looking to short the market. At this point, there was a divergence. It's kind of, you can easily see it on your chart. If you want to be profitable, just take a look at this stuff right now. You will see that the price is kind of trending downward. It works at this point in time where you need to sell. That's the first point for selling. This is the second point for selling, because it's showing you its price is located in the overbought zone. And the third point for selling, you're looking to sell this market at this zone, right? Yeah, this is kind of correct. You want to sell this market, which happened what? It went downward, but it didn't have that strong movement. This is the daily time frame, 230 pips. If you're on the smaller time frame, you might be able to catch 100 pips or so pips, the same. But if you're looking to short this market, if you're looking to buy this market, you will not be having that what's it called, that not short, but if you're looking to short this market at this point in time, you will be losing. The reason why, the price is at the middle of nowhere. Look at it. It didn't come closer to the sold zone. Immediately breached this. What I'll be looking at right now, I'll be looking to sell this market. Yeah. The price is already showing me I need to sell. I need to sell. When can you sell? You don't just look like, hey, yeah, it's already showing me at the RSI is showing me that it's in the oversold zone, overbought zone. Trader are not buying this market in the market, this pair in the market. Let me start selling. No, you need to see sign in order for you to sell. Number one signal, the RSI is already telling you there might not be strength of this JPY, Euro JPY going to the upside. There might be a potential reversal to the downside. That is a signal that this relative strength index is already flashing for you. What you need to do, you need to start looking to short, but you don't just jump inside and start shorting. So guys, this is the relative strength index. We have the articles on our website, and I did the MACD, I did the RSI. The next one is going to be the stochastics. Stochastic, I still believe, is still the momentum indicator. The first 3 or 4 there is mostly momentum indicator. And finally, the analyst said that the technical analysis will just provide an overview of instrument from a perspective of technical indicators. Yeah, this is it. And if you look at our technical analysis, both trading pattern and idea, we always have the technical indicators. And most times I myself, I reference to the technical indicators. You can see we have these technical indicators always, and I do reference it. If you come across technical indicator, I believe I reference it at one of this. Yeah, look at it. However, technical indicator demonstrate that the currency exchange rate will continue to trade south today. Why I said so, the technical indicator reference it. MACD already shows me that what the price is going downward on the 4 hours time frame. However, RSI disagree with me. He said that the price is going to the upside, but I don't know why that is, but let me check. I'll have this RSI to see. Yeah, the reason why this RSI shows that what's it called? It's going to buy signal because it's kind of close to the 30%, but it's not even near there. So that's it. And you can see this stochastic is showing neutral. The SARS, the alligators, they are telling me to sell. So that's the reason why you see I said, however, technical indicators demonstrate that the currency exchange rate will continue to trade SARS today. Sometimes I make reference to the technical indicators. That's the reason why we have the article. That's the reason why we have this widget. So guys, thank you very much for your attention. If you have any question in the future, simply so drop it. Or what do you think about what's it called, my webinar? Just drop your comment at the comment box. You need to support me and just give a thumbs up. Until I'll see you next week, Monday or Friday. Most precisely, it's better for me to do Friday in order for me to talk more about the indicators. So I believe by Friday next week, these alligators or the stochastics articles might be ready. So I'm wishing you a very happy weekend. Sorry for those guys that's on the losing markets yesterday because of Brexit. Always try to stay clear from political events. So bye bye and see you next week. Till then, remain blessed.